Well, the commodity to keep an eye on clearly is now steel prices, where we have seen 19 weeks of decline in the steel prices. Now it's trading below 35,000 rupees per ton in the Indian markets. And we also are looking at the domestic prices down by nearly 27% in the last 1 year. Also, when you look at the domestic prices, they are at a 4% discount from the landed cost when imports are done from South Korea and Japan. So yes, the pressure is there, but then the exports have been picking up and there are purchases and sales happening at a lower price. So the volumes are still seen, but all of that transaction is happening at a lower price. It's a pretty similar situation when you look at the international market. So when you look at the Chinese HRC prices, they are at 2019 lows as well. We also are looking at steel ingredients like iron ore, coking coal prices continue to decline. But the point is, even as the supplies have been declining as well, the demand is a more crucial point which has been on the lower side. And that basically is what the markets are following right now. But then having said that, there are a couple of positive points coming in for steel. One, the expectation that the Indian reforms infrastructure pickup will support steel going forward. As of now, we've seen all weak numbers coming in for infrastructure, for automobiles, etc. And that has been a dampener. The other is the weakness in US dollar index. That one is trading at a 2-month lows, and that leads to some buying in the dollar denominated commodities across. The third thing is China looking to curb production of steel in the major hub of Tangshan. There are bigger curbs now put out from 18th to 22nd of October. So lower supplies, cutting production, curbing it would mean some sentimental support coming in for prices as well. And that is the reason you have seen some support come in today, but then much would depend upon the macros. Remember, all the economic data has been on the weaker side from China, whether it has been the GDP numbers, inflation numbers, export-import data, and then you have the US retail sales, home building numbers, factory activity, all of that coming on the weaker side as well. That is expected to continue to put pressure, except if we actually see US and China trade deal go on the positive side, Brexit go on as the markets are initially looking at. These factors could actually change the fortunes, but until then there perhaps is some more pressure remaining to continue into this sector.